Hello, today we're going to talk about our travel expense analysis for ABS. First, we're going to go into the problem description, then we're going to go into the data-driven insights and data analysis, and then we'll give our recommendations. Our primary goal is to identify the business units with the most significant transactions and detect trends that could help forecast which business units may incur significant transactions in the future. We will accomplish this by defining significant transactions as travel expense transactions in the highest 10% of dollar value, then identifying significant transactions by travel expense type and business unit. Then we'll quantify the total significant transactions by travel expense type and business unit, and then we'll predict which travel expense are more likely to incur in the future. By doing this, we will be able to pinpoint potential problem areas. This will give ABS a much clearer understanding of which business units might need closer financial oversight. It could also help us spot any areas where there might be fraud or suspicious activity. With a better view of where the significant travel expenses are, ABS will be in a stronger position to address issues early. Also, it will help improve budgeting accuracy. By identifying where the major travel expenses are and taking action where needed, ABS will have a much clearer picture of actual costs. It will also help reduce travel costs. By identifying areas where money is being misused or where fraud might be taking place, we can reduce both billable and administrative travel expenses. This will ensure that travel costs are accurate and transparent, as well as making ABS be seen as more financially responsible. This not only strengthens current client relationships, but it also positions ABS as a more competitive and cost-effective option for potential future clients.
Now, moving into our data collection and insights we were able to gain, our analysis of significant transactions was conducted in two phases. First, we examined trends across 8 distinct expense categories, and then we explored these trends at the business unit level. For phase one, we did an expense type analysis. When analyzing the frequency of significant transactions across the 8 categories, we found that mileage and car expenses together represent a substantial majority, accounting for over 72% of all significant transactions. This indicates that these categories are the most utilized and suggests areas with potentially impactful cost management opportunities. Next, in terms of dollar value, airfare dominated, contributing over half of the total cost from significant transactions, while mileage made up over a quarter. Notably, the single highest transaction was a taxi expense amounting to over $26,000. Additionally, 4 categories, mileage, car, airfare, and taxi, each cost the company more than $1 million from 2018 to 2022, highlighting areas with high cost significance. Over the 5-year period, 2018 to 2022, excluding the year 2020, the company spent more than $29 million on significant transactions, underscoring the impact of these costs on overall expenditures.
Now looking at the significant transactions broken down by business unit, we found that business unit 1010 spent the largest dollar amount on airfare, with the total being over $4 million. Next, we found that business unit 3210 had the second largest sum, with mileage being the largest expense type. Then we found that business unit 1020 had the third largest sum, with airfare and car as its two largest categories. Finally, we found that business units 4416, 4420, 2830, and 1007 had no significant expenses.
The main 3 steps that summarize our analysis are these. First, we wanted to remove all the transactions by the employees who had the top 2 travel amounts for all the years, since we were told that there were 2 employees who booked for corporate events, and that was not in the normal course of this employee business. So we filtered for those employees and removed their transactions. Then we identified the most significant transactions by business unit, expense category, and the year the transaction was recorded. As mentioned earlier, we define significant as any transaction with an amount in the top 10%. Then, using features we created, we identified any anomalies within the significant transactions. These transactions with anomalies would be identified as those that need more observation and supervision. The features we use to identify the anomalies are these: the sum of amounts by business unit, year, expense category, the average amount, the minimum amount, the maximum, the count of transactions, and unit percentages. which is the ratio that the significant account comprises from all identified significant transactions. We then filtered for all the anomalies that were greater than 50% because we thought that anything below that threshold was insignificant. This is a snippet of the business units and expenses that had an anomaly score of more than 50% from the year 2022, which was our testing data.
To conclude, we found 3 recommendations for ABS. The first is more supervision and a quarterly review for the business units with significant transactions. The review would examine significant transactions by expense type and ensure that they are valid. They should also ensure those transactions have proper documentation and align with the company's travel policy. They can also compare travel expenses from the quarter to prior quarters and the comparative quarter from the prior year. Our next recommendation is a cap on travel expenses across all business units by expense type. If a transaction were to exceed that threshold, it would immediately require additional documentation to justify the expense. Management could then review and approve or further investigate those expenses and ensure company resources are being used appropriately and efficiently. Our last recommendation is that ABS run the analytic annually. We want ABS to use the most up-to-date and accurate information. With the business environment constantly changing, we want the company to be able to use the most relevant information and make sure they are allocating their resources effectively based on that information. We understand that the features used in anomaly detection may not properly account for all the variables that would result in an anomalous transaction, especially because the features used were created instead of the original raw data. This may have created inaccurate results, such as identifying business units and expenses in the usual course of business as anomalies. That is why our recommendation is to compare to prior quarters to be able to address this possible issue. Another problem that we identified is that we need to account for the fact that some business units and locations require higher expenses. Some of the anomalies detected in our training and testing data may be normal transactions, but we cannot identify those differences in business units based on the data given to us. Therefore, we believe that our current data usage is sufficient for identifying anomalies from a general point of view.
Thank you very much. I hope this presentation was helpful.